Welcome to the room. Oh, how are you guys doing today? We awake? Feeling good? Did I unmute my microphone? Can never tell. There we go. You guys hear me okay? Awesome. Good morning, Erla. Cool. Good morning, Steve. Nice to see you guys today. Muser? I swear, Muser, I still think that's what you look like. From the picture in your little avatar thing there, or whatever they call it. Guys, good morning. Welcome to the room. It's close. Hey, Jay. Good to have you back, man. We're going to have some fun today. For you guys that are newer to the class, you're going to realize that this morning sounds exactly like it did yesterday morning. And tomorrow's class is going to be exactly the same as well, guys, because we're going to focus on advantages for an hour. That's it. We're going to talk about some rules. I'm going to give you a plan. Really, my promise to you is that I'm going to give you everything that you need to be successful with the software. The only thing that I refuse to put in your hand is experience, because I can't do that. But we're going to go through and we're going to learn a few very basic concepts and how to apply them to turn into a trading plan. So before I do anything, guys, every day, and I share this link with you for a reason, I go to forexfactory.com/calendar. Hey, good morning, Miss Adriana. And I check for news. I'm looking for high impact. I'm looking for medium impact news. And today, Tuesday, September 10th, guys, there's nothing going on. It's all low impact. I'm not really worried about it. Market isn't likely to spike or jump. It may, but it's not likely to. It's these high impact, medium impacts that I'm looking out for. I don't even bother, guys. I could, honest to goodness, I tell you, I could do this right here and never even look at what the news is. Don't have any concerns about what the news is. I'm just looking for high impact and medium impact so that I can avoid it. And that's really it. I'm just trying not to get in the way of someone else's emotional response. When I'm using, or when I'm talking about rules, and that's all I do is talk about rules. When I'm talking about them, all of them come from the trading guide, right off the Nexgen website. These are the answers. If you're not in class and you're like, man, I wonder what those yellow dots are. What's a 1-to-1? Go to the glossary of common terms, guys. This is a lot of the things that you're going to hear in the class, that you're going to see in the class. And it just lets you know what it is we're talking about. And what we're going to talk about for the first hour, same thing we talk about for the first hour every day, is a high probability trend trade. We're going to talk about a trade that typically wins. That's it. That's all you need, Ron. We're going to talk about a trade that typically wins 70 to 80% of the time when you follow the rules. We're going to talk about a trade where each indicator on every chart agrees for the rules for the trade. Guys, this is the best of the best. This is when all the triggers are their strongest. This is when there's no termination conditions, guys. There's no trouble spots between you and your entry target. And when you talk about the high probability trend trade, guys, this is a trade that's going to keep you relaxed. This is a trade that's going to build confidence. This is the trade, more than anything, is going to teach you to read your indicators. And I always love this. Do the little segue, right? We're going to become chart readers, and I want you to think about it that way. Everybody comes to Nexgen thinking, man, I want to be a day trader. But I'm not going to lie, you don't want to be a day trader. You want to be a chart reader. Because chart reading is gonna have you recognizing the advantages that you're looking for. Hey, good morning, Tom. The ability to read your indicators, guys, is going to keep you patient. It's going to let you identify advantages. And chart reading should be the goal. You should want to be able to just read the indicators. You lost sound? Uh-oh. Give me one sec. Maybe you guys can hear me as I come back, but usually a little reboot gets us right where we need to be. Hopefully you can hear me. Whoops. Let me open up that page. You guys got me okay now? No sound still? Nobody yet? Alright, so I may have to do a full reboot. Hold on just one second. Okay. And for you YouTubers, sorry about this. Every now and then Discord gives us just a little bit of grief. And I don't mean for it to, but it does. Alright, you guys got me back? Can you hear me? Awesome. I always feel like I have to explain it to the YouTubers. I'm like, hey, sorry guys. But this happens sometimes. Ron, the information analyst. I like it. I'm a waiter. I'm a professional waiter. People ask me what I do. I say I teach people to be patient. That's it. And guys, we're going to give it a second just because I know some people need to jump back in here. Just, wow. I'm sideways today. I don't know why. I'm having trouble collecting my thoughts this morning. Good morning, Zorro. Good to see you. Rob, nice to have you back. Guys, 90% of your day. It's funny because I say this, and I'm teaching a couple friends how to read indicators right now, and they keep coming back to me. Yeah, Ron. And they keep coming back to me, and they're like, hey, Mark, I can't find a trade when I'm looking for one. And I'm like, well, are you looking for a trade or are you looking for rules to be met? Well, and they're like, well, the rules aren't always met. And I'm like, well, no kidding. That means don't be in a trade. And 90% of your day, guys, is just waiting for the rules to be met. And nobody believes me when I say it. And the people that have been doing this a while will tell you that it's more like 98% of the day. Your advantages are your reason to trade, guys, and your chart reading helps you identify your advantages. And the cool thing is you're going to understand with just a little bit of study where the market is likely to continue. We're going to use this spot for entry on the highest probability trend trade, that continuation point. You're going to understand where the market is likely to go. This is going to help you make intelligent choices on targets. And most importantly, you're going to understand where the market is likely to stop. And guys, these likely to stop areas are what we call termination conditions. And a termination condition is nothing more than a big bold line on your chart that says, hey, don't take that next trade. I'm going to give you a recipe for identifying all of these things. And we're going to do it through the highest probability trend trade. That trade that's going to develop that trust. When your butt starts to flatten out from sitting, you're getting there. Amen. There's only 3 rules to the high probability trend trade. So you new people that think that you're going to have to learn all these different technical analysis and patterns and what if your bear bull flag pivots out to the stochastic. I don't know what any of that means, guys. We're going to focus on 3 things. Each rule for the high probability trend trade creates an advantage or recognizes an advantage. The first rule says that the large chart needs strong trigger lines. And your trigger lines are going to be an integral part of everything that you do with the software. When you have strong trigger lines, you'll have the advantage of momentum, guys. And the advantage of momentum is the one that I never really want to do without. The advantage of momentum is like the market being shot out of a cannon, guys. It's hard to stop momentum. It's likely to push it in the direction of the trend. Momentum can break those key areas and cover mistakes, guys. And what you'll find, especially if you pay attention in the room, you'll notice that most of the trades that are presented that happen to be losers seem to be lacking momentum. And when people have the best of the best momentum, you're going to see a lot more wins coming from it. So this is your first advantage. We're going to learn how to recognize it, and you're going to be able to say to yourself every time you look at your charts, I do have momentum or I don't. And then we're going to look to make sure that there's none of those termination conditions. None of those areas where the market is likely to stop. And that's going to leave us room to our profit targets. And guys, that's going to be your clear path. That's going to mean that not only is the market going full speed ahead, but there's absolutely nothing in the way to stop it. And these two advantages on their own are enough to have like an amazing trading plan. These two advantages are enough to put you into the market and win more than you lose, to be consistent. So we're going to focus heavily on these two. And once they're there, once we have those advantages, finding a trade is very if-then, guys. If I have momentum, then I'm looking for a clear path. And if I have a clear path, then I'm looking for an entry area. And they're in this order for a reason, guys. But your entry area is for the high probability trend trade. This is putting you into the market where the market is most likely to continue. And this rule number 3 is exclusive to the high probability trend trade. As you learn to read your indicators, your rule number 3 is going to change a little bit. You're going to find other opportunities to capitalize on these advantages, but in the beginning, we're going to keep it very focused, and we are going to keep it very simple. Only 3 rules, and a trade is the accumulation of these 3 advantages. And these 3 advantages will come to be on only 2 charts. There are people that are going to post charts, and you're going to see 3 charts, 4 charts, 5 charts, and more isn't always better. More information is not always your best bet, because now you're making decisions on 4, 5, 6 different charts because you think it gives an advantage. But what it typically does is it confuses new people. Your large chart leads the way. Your large chart is going to give you 66% of your advantages. Your large chart will define the direction of the market, and it's very simple. If the background is green, the market's going up. You don't have to worry about higher highs and higher lows and doing all those calculations. If it's green, the market's going up. We should be looking for rules to be met for high probability trend trades long. And if it's red, the market's going down. We should be looking for rules for high probability trend trade short. That's the easiest way. Go with the flow. Your large chart will define the momentum in the market through rule number 1 using those strong trigger lines. And your large chart will define the areas that may be problematic. And you will know about these areas long before you get them, and you'll be able to make the choice not to trade directly into them. That's rule number 2, assuring the clear path. Once these rules are met, rule number 3 happens on a small chart, a fast chart. It is very much a refinement chart, guys. If the large chart is a slow-moving, rambling down the highway kind of chart, the entry chart takes an X-ray of that large chart, and what it does is it turns that 1 bar on a large chart into 15 to 30 bars on a smaller, faster chart. Here's a picture of it. I put a bar or a box around 1 bar on the large chart, guys. This is telling me everything I need to know to look for a trade. And then the X-ray on the small chart is going to pinpoint exactly where the market is most likely to continue. And this is where rule number 3 is going to come into play. And by using that refinement chart, you're going to be able to reduce risk dramatically. You're going to be able to pinpoint where the market is most likely to continue. This is going to help you increase your profit potential. And that's rule number 3 for the high probability trend trade. We use these 2 charts because one of the greatest lessons that I ever got when I started trading was that I'm not in control, that the market doesn't care about my position or my needs or my wants, my desires. It doesn't even care about me, really. The market's going to do what the market does. So we're trading patterns. We're trading patterns that repeat themselves. The market has a memory. And the large chart is the large crowd. This is where the majority of the people with the most money, they are creating trends. They're establishing momentum. They're reacting to those key areas. And who are you going to trade with or against, guys? Trading with the large crowd. It's like being in the lazy river at the MGM. Pina colada in one hand, and I don't know, maybe a big cigar in the other, and all you're doing is relaxing and going with the flow. But there is a small crowd, and these guys are still 1,000 times bigger than any of us, and they love to fight. They love to say, you know what, everything's going up. Let's push it a little bit. Let's create some waves. And they do. They create retracements that you're going to see on the smaller, faster chart. You won't notice it on a big chart, but on a small chart, you're going to see this little retracement, this fight against the trend and momentum. And the great thing is that these guys typically fail 70 to 80% of the time. That means that when you pinpoint where they're most likely to fail, what you've done is you've established an entry where the market is most likely to continue with that overall trend, guys. And we're going to use that refinement process to pinpoint where the small crowd is most likely to fail when they fight. And it's just 2 charts, just 3 rules. And there is a gospel truth, proven path to getting to where you want to be the fastest. And I'm going to tell you guys, I fought this path tooth and nail, refused to do it, wouldn't do it. It cost me a lot of money really quick. And this whole class is designed around the idea that I've made every mistake that's ever been made. And I think I've even invented some new ones. And I've learned how to work around it to fix it and to move forward. So I teach this class from a position where I'm going to help you avoid a lot of the common mistakes that I made, a lot of the mistakes that new users make. And the easiest way to do that is if you guys post your trades in the room. Everything that you do, post in the room. Everything that you see, post in the room if you have a question about it. Because we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to make it very clear. We're going to break them down individually. We're going to talk about what they mean to you. You're going to learn how to study them. And you're even going to have access to an awful lot of pictures of the rules being true. Your job is to simulate, to practice, to read your charts, guys. That's the goal. Be a chart reader. And then post in the room and talk about those 3 concepts. Every time you post in the room, tell me about the momentum on your chart. Tell me about whether or not you think you had a clear path. And show me where you entered. And show me where you exited. And guys, if you give me this 5 times in a row, I'm going to know exactly what you need to work on, and I'm going to know exactly how to help you. So make sure that when you're posting what you see so that we can make sure that you're seeing it correctly. We will simplify, guys. I'm going to talk about that high probability trend trade. It will open the door for what we call a medium probability trade. If the high probability trade means that every indicator on both charts agree for the trade, then the medium probability is most of the indicators agree for the trade. However, a small issue exists. Your ability to read charts will identify that issue. Your ability to read charts will allow you to manage it more aggressively. And your ability to read charts is going to have you knowing where to take quick profits and get to a 0 loss level. So the high probability trend trade is going to open the door for the second trade. And I will give you a plan for that. And then once you're comfortable there, guys, if you decide to, there are more opportunities in the market. You have to know what it looks like. You have to know these looks so that they become easy. And that's where using the spreadsheet comes in play. That's where using your capture, your TechSmith capture that was downloaded with your software, that's where this comes into play, guys, because the easiest way to learn this software is not taking trades. Believe it or not, there's a little bit of anxiety associated with that with new people. The easiest way is to take pictures of everything you see, to take pictures of the patterns, of the rules being met, of the rules not being met. So this spreadsheet was given to you. It was downloaded on your computer whenever you got your software. Whether you're on demo or an owner, you have this spreadsheet in the Nexgen Study Picks folder. I just dropped mine in the room so you don't have to search for it. But your first tab, this is your trade journal. This is every time you pull the trigger. Take a picture, talk about momentum, clear path, and entry area, and drop it into this spreadsheet. And the idea is that you'll come back to it tomorrow. Everything that you do yesterday, you're going to look at today, and you're going to start talking to yourself. What worked? What didn't work? What kept me relaxed? What felt forced? And guys, this brief historical study each morning, it'll take you 3 minutes over the first couple sips of coffee. It's going to set you up for the day. It's going to have you focused on the patterns that are bringing you success, but it's also going to have you recognizing the patterns that might be taking that success from you. And guys, that's really where I kind of shine as an instructor, I think, is if you give me 4 or 5 pictures in the room and you annotate your chart reads, guys, I'm going to know what your thing is instantly, and we're going to work together to fix it. The spreadsheet also has a 101 section. Green section is the rules being met. Individual pictures of the rule explaining exactly why the rules are met. The red section is when they're not, because I think it's important to know both sides of the coin. The favorite looks is where you're going to develop a trading plan. As you begin to take these pictures, this is where you're going to put them. Anything that fits the rules, you're going to drop in the green section. As you start looking for ways to manage, you're going to drop them in the orange section. There's patterns that you're going to see all day long. Those go into the blue section. And then guys, I encourage you to do this. Termination conditions. Every time you see one, drop it in here, because that is the most broken rule. Rule number 2 is broken more than any other rule in this classroom. And then finally, there's the client trades, guys. And I'm going to say right now, these trades may have deviations from the rules. These are the client's trades. Don't be the trade police. When you look at somebody else's trades, go back and talk to yourself about the advantages present. Don't worry about whether or not they broke your rules that you're trying to follow, because trading is an individual sport, guys, and everybody's going to find a different way to do it. And it all stems from chart reading. But this has the high probability trend trade entries for long and short. There's a management idea, a lot of great information that I've taken from the clients, patterns that repeat themselves, and a lot of termination conditions. Your goal should be to take enough pictures to make your section look like my section. And I'm telling you, if you commit 15 pictures a day, this is what I encourage people. 15 pictures a day is 300 pictures a month, guys. 300 pictures a month, my gosh, 900, almost 1,000 pictures by the end of a 90-day study period. And it's hard not to get good at something if you've taken pictures and annotated something 900 times. If you go to my library, I'm at just under 4,600 pictures. On my laptop, I've got another 10,000 on that Snagit. The more pictures you take, it's almost as though the market slows down. And that's what makes it easy. That's what makes it easy to recognize these advantages without hesitation. So we're going to move forward. I'm going to encourage you guys to interrupt me if you need a little clarification. It's okay. There is no time schedule. There is no syllabus laid out in front of me. I don't have anywhere I need to be at any specific time. So if we're talking about momentum and you just have a question, throw it out there. Make sure if you post in the room and it's about what I'm talking about, say, hey, Mark, this is about where we're at. Otherwise, the second half of class is dedicated to looking at the pictures that you guys post. So Tom, you had a gap theory question. So when we get to termination conditions, I'm going to go after that one for you, because the gap theory allows us to recognize termination conditions. You bet. So we're going to start with strong trigger lines. The large chart must have strong trigger lines because we need that advantage of momentum. This will be the easiest lesson you guys get, guys. Strong triggers means in an uptrend that the small triggers are above the large triggers. Both are wide, angled in the direction of the trend, and there is space created between the small and large. You don't have to know why it's small and why it's large, but your small triggers are solid lines. Your large triggers are dashed lines, fast and slow. But it's that gap between the two. That lets me know that the odds are favorable for the market to continue up. In a downtrend, background's red, triggers are red, gap between the small and the large. There's space like scissors that have opened, ready to cut. Lets me know that the odds are favorable for the market to continue down. When I talk about strong triggers, you're going to hear me say odds favorable momentum. You're going to see OFM annotated on charts. Odds favorable momentum, guys. This should paint a picture in your head that makes you feel good about the advantage of strong triggers, because these are likely to push the market. These are the trigger lines that can break those key areas, and these are the trigger lines that cover mistakes that we tend to make as new users. When you have strong triggers, you'll be able to use that smaller, faster chart to buy a pullback at Fibonacci support in an uptrend, or maybe to sell a pullback to Fibonacci resistance in a downtrend. On a large chart, it looks like a tail. These tails are that pullback that we talked about, where the small crowd is most likely to fail. We don't trade the tails, but you will be able to pinpoint precisely where the top or bottom of that tail is most likely to form. And while I think it's important to recognize strength, and I think it's important to understand momentum, it is equally as important to understand that when your small triggers work their way back inside of the large triggers, you have weakness. You have anything can happen up or down triggers. You'll see that annotated on charts as ACH. So there's a big difference, and language plays a big part in this. Odds favorable, strong, anything can happen, weak. So your job is going to be to commit. I'm going to insist on momentum. I want that advantage. I need the advantage of a market that's likely to continue in the direction of the trend. And guys, you can pick it out of a large chart all day long. Separation between the small and large is pushing down. That's your best look. And sure enough, the market pushes down. Weak triggers in the middle of nowhere, and it starts a push up. You see strength to the downside again, weakness creating a big retracement. And guys, this happens over and over. And it's going to happen all day long. And the only thing you have to do is say to yourself, my money's worth momentum. Are there any questions about momentum? Is everybody good with this? I'm a huge fan if you guys give me a why, if you understand what I'm talking about. Otherwise, if you're not, let me know. Let's go back. Let's revisit. You guys are good? Love it. Guys, momentum is the one that I won't do without, because it will cover about 32 flavors of stupid that I tend to throw at the market now and then. Once I have it, nothing in the way, making sure that there's no termination conditions. None of those areas that are likely to stop the market. And guys, a termination condition is nothing more than a line on the large chart. It's just a horizontal line on the large chart. And there's different flavors of termination conditions, guys, or areas that may stop the market. There are divergence high lines. And this is just a magenta line that prints off of a pivot, means the market went up and down. This pink line, this magenta line, says to you, hey, there was a loss of momentum. That's all divergence is. It's a loss of momentum. And that's what I want you to equate it with. At the bottom, you'll see a light blue or a cyan line. It's the exact same thing. The market goes down and up. Right about the third bar, your software calculates and says, hey, guess what? We're losing momentum. These lines may stop the market. There's also Fibonacci resistance, guys, a red line that you're going to see on your large chart. And when the market is trending up, this is a point where the market may stop, bounce, or reverse completely. I'm going to give you the recipe. And then, of course, the opposite of resistance will be support, the blue line. And when the market is trending down, this is a point where the market may stop, bounce, or reverse completely. And then you're going to look for yellow one-to-ones, guys. And if price is trending up, they may act as resistance. And if price is trending down, they may behave as support. So we're going to look for these lines on a large chart. And guys, these lines, I dropped that picture in the room too if you wanted to download it, put it into your spreadsheet. These lines are where the large crowd are reacting, guys. These lines are where these guys are making decisions. So in order to determine whether or not they are in fact a termination condition, guys, you're going to let price reach. You're going to let that decision making come into fruition. I was talking to somebody yesterday. It might have been my brother. And we were just watching the reaction of the market around the lines. The way there may be a straight line run, and once they got close to these fibs, you start to see this little seismograph look, guys. And that's the fight that happens at these key areas. So we're going to let price reach resistance, or we're going to let price reach support. But price reaching the line sets off the process. And then you're just going to ask yourself, where are my triggers? And it really is that simple, guys. If price is trending up, the buyers are pushing, they reach Fibonacci resistance. Maybe it's a red line, maybe it's one of those pink divergence highs, maybe it's a yellow one-to-one. You're going to say, where are my triggers? And then if your triggers remain below resistance, resistance may reverse the market. It may stop the market. It may create an untradeable bounce. And what that means to you is that rule number 2 isn't met, the path isn't clear, no trades into that area. From resistance, guys. If they can reverse the market off of resistance, if it hits that line, the triggers remain below, and they literally turn those large triggers in the other direction, we're going to call this a strong top. And what a strong top means is that really any trade that happens right around here is going to be the highest probability that you can take of that trade. Whether it's a 50-50, whether it's a high probability trend trade, guys, great things happen from strong tops and strong bottoms. Market comes down, reaches support. Everyone in this room just says to themselves, where are my triggers? And if the triggers remain above support, you have the choice. You can make the decision and say, rule number 2 isn't met. I don't have a clear path. I'm not going to trade into this area. Or you can give your money away when the market bounces right off this key area where there's an untradeable bounce or a reversal or a fight. Rule number 2 is designed to keep you safe. Rule number 2 is designed to keep you from trading into areas that may stop the market. And guys, once again, if I just open up a large chart, I want you to see this. Where did it go? I think I just closed out my large chart. Whoops. Guys, if you ever close out your large chart, let me show you a trick. That was crude oil. I accidentally X'd out of my large chart. I'm going to close my workspace and I'm not going to save it. And what that's going to do for me is it's going to allow me to reopen that workspace and that large chart will show back up magically. So as that comes up, we're going to go and we're going to look at how these lines make the market react. So let me make that one bigger. It's almost done calculating. Straight into resistance, right back into support, directly into one-to-ones, back to support, right into resistance, straight to the one-to-ones. And guys, they are working their way up, and there has been a fight at every line on this large chart. Didn't make it to the blue line, came right back to resistance, finished the move, and it was right up here near resistance that started the push down. So you can go back and just take a look at these lines and say, wow, that's powerful. 60% of the time, they work every time, guys. It takes away your advantage. That's when not to trade. When the small triggers and the large triggers, I made that too big. When the small triggers and the large triggers get below an area of support, get above an area of resistance, well, that area is broken. Trade away. So there's a definite life, or not lifeline, maybe life cycle of whether a fib is a termination condition or not. When price reaches, it's no trade. Don't take that trade. Don't trade into an area if the triggers are above it. Your advantage is gone. When the small and the large get below support, support acts as resistance, trade away. And then there's the transition phase, guys, that point where we're not sure what's going to happen. If your small triggers smash through an area, but your large triggers are lagging behind, this area has the potential to break, but it's never going to be considered a broken area until both sets of triggers get through. This will be your second trade. We call this a 50-50 look. 50% of my triggers are through, 50% are not. That potential creates a lot of opportunity, and I'm going to give you a very solid plan to take advantage. So price reaches support, triggers are below, nothing to do. Small smash through, larger lagging, has the potential to break, but it's not considered broken until the small and large get to the other side. Can you guys give me a why if you're with me? This is a very important concept. Small's through, large not. It only had the potential, and look at that bounce, guys. Let's see if we can find another one. Smalls broke through, even with odds favorable momentum. And that market ultimately went up. This area didn't break. It's nothing more than potential. I'm going to give you rock solid plan to take advantage of that potential. But what you're going to find is that areas break and then you reach the next area. That clear path is only good up until the next line. Trading in determination conditions is one of the most broken rules, guys. Rule number 2, trading into a line that may stop the market. And this is where the patience comes in, because you're going to say to yourself, all right, I reached support. I can't take that trade. And then the small triggers break through and you get excited and you have to say to yourself, dagnabbit, another blue line. Egads, a divergence low. And guys, you're going to get these stacked areas. and you're going to ask me in this room, you're going to send me a message, Mark, how the hell am I supposed to make money if it keeps hitting lines? 90% of your day it's okay to do nothing. 90% of your day you're going to sit on your hands. 90% of your day you're going to wait for advantages, guys. The futures markets trade billions every day. You don't have to be in every move. Your advantage comes from being in the best moves. And this is where I encourage people that begin to get frustrated about this. You only have to make $200 a contract on a 2-lot. $400 a day puts you in a 6-figure income. The market trades billions. You're trying to take a drop out of the ocean, guys. It's okay to be patient. You will find your opportunities. And what you'll notice as you begin to study rule number 2 is that it can keep you out of consolidation. It can keep you out of chop. You know exactly where the market is most likely to stop, and you can choose not to trade into it. And the cool thing is, let me show you the picture that I took this morning. I take a lot of pictures, guys. I take a lot of pictures. You're going to find that these fibs make great targets. And if you have experience trading, have you ever gotten out a tick before the reversal in the market? You look like a rock star. You feel like a rock star. You know exactly where that market may stop, and you have a recipe to understand. So one of the key points that I tell new users is learn how to get paid. Learn how to respect these lines. Learn how to take profits at lines instead of hoping that they break, because more often than not, they don't. That's why rule number 2 is in place. Everybody's good? Love it. So if the large chart says it's time to take a trade, if the large chart has momentum, right, we can see it odds favorable. If the large chart hasn't reached an area, no lines. Well, we're going to go to the small chart and we're going to look for our entry, guys. We're going to let that small crowd do their fight. There is one termination condition on a small chart that'll kill the process of looking for an entry, guys. Only one. That's it. And it's 3 divergences in the same price range. 3 losses of momentum in the same price range may terminate a trend. It might terminate a trend. It could terminate a trend. There's the potential there that it will terminate a trend. Nothing is guaranteed in day trading, guys. These are just patterns that repeat themselves. And there's patterns that provide advantages, and there's patterns that take those advantages away. 3 divergences in the same price range removes your advantage of a clear path. It becomes more powerful if you have weak triggers, the same lesson from rule number 1. And it's more powerful still if it creates a little head and shoulders pattern. If that third pivot is higher than the previous from a low or lower than the previous from a high. And guys, this is the only time when I have odds favorable momentum and a clear path on the large chart that I will let the small chart talk me out of a high probability trend trade. It's the only time. But the cool thing is that doesn't happen all the time. And when you have those advantages, when rules 1 and 2 are met, let's pinpoint where the small crowd is most likely to fail. And we're going to do that with such precision that you're going to be able to use a limit order to buy or sell that little pullback at an area inside of triggers, guys. And there's some very key concepts here, and this is where language becomes very important. You're going to buy or sell a pullback, that fight from the small crowd, and you're going to do it at areas. Fibs, mid-bands, or yellow 1-to-1s are going to give you a place for that market to bounce. But here's the key, new users. We want those areas inside of triggers. So I want you to use that language every time, areas inside of triggers. And we do that because price returns to large triggers, guys. There's not a lot of absolutes in the market, but this is definitely one of them. Price returns to large triggers, guys. Price returns to the large triggers on the small chart. Price returns to the large triggers on the large chart. So what we've done is we've put both of those large triggers on the small chart. Smooth is native to the 5-1. You're going to use that to establish momentum. And then these stepped ones are from the large chart. It's just the large triggers from the large chart. And I expect price to return to these triggers. That's it. It's just a correction point. But when the large and the synthetics, good morning, Andy, are one on top of the other, when the large and the synthetics are overlapping like 2 snakes riding piggyback, what you've done is you've taken the correction point from the large chart and the small chart and put them in the exact same location, which means you have the least amount of room possible for an area to be inside of them. And the areas are where the bounce happens, guys. The area are what we expect to stop that downward progress and where we expect it to bounce in the direction of the trend. So triggers are where the price should correct. Areas are where we anticipate it to bounce. So favorable large triggers for the new user creates the highest advantage, the least amount of risk, and the most accuracy. And it doesn't matter if it's a large or a synthetic. One's not more important than the other. So on this particular one, the small chart price may retrace to the large triggers. And I have 1-to-1s and a fib inside, and those may create a bounce. And then my large chart large triggers, the synthetics, are a little bit lower. And price may go to those. I don't know. And there's a mid band inside, and this mid band may produce a bounce. So I use this concept of areas inside of triggers, and we're going to create a window from the highest to the lowest point of support, or the lowest to the highest point of resistance. And this red box represents the point where the small crowd is most likely to fail, where the bounce is most likely to happen. And the tighter those triggers are, the least amount of room there is. The higher the accuracy, the least amount of risk. So there's this order of operations to make it happen. And you know what? Let's use the example from the spreadsheet, because I've got both long and short in here. So rule number one, more than anything, is make sure that the rules are met on the large chart. Make sure that you have odds favorable momentum. Be sure that you have a clear path. Guys, give yourself this best of the best. And then you're going to wait for a reversal bar on the small chart. The reversal bar is not your entry. This reversal bar says, hey, the small crowd is fighting. Let's go find those trigger lines. And you're going to draw a box mentally, or actually do it if you want, from the lowest line of the triggers to the highest line of the triggers, large triggers, guys. It can be synthetic below the large. It can be large below the synthetic. It doesn't matter. From this line to that line, that's where we're looking for areas. That's where you're going to turn your attention to fibs, mid bands, yellow 1-to-1s. Those are your options. So from the lowest point of resistance, happens to be Fibonacci resistance, to the highest point of resistance, in this case it's a mid band, this represents the point, the window of opportunity where the market is most likely to continue. And this is where I encourage you newer users, every time you take a picture of your entry, every time you look for an entry, I want you to rattle off the phrase, areas inside of favorable large triggers, because lines beyond the triggers are not where we want to be. Your job is to find these lines inside of those triggers and study enough to develop the trust to activate a limit order just below that lowest point of resistance and say to yourself, because of momentum, because of the clear path, I don't expect the small crowd to get all the way up here. I know they might, but I'm not going to trip over a couple pennies to save a few dollars, guys. I'm in a tick or two below that lowest point of resistance. And if the small crowd's fight gets you there, guess what? You're in a short trade. And you're in a short trade with the advantage of momentum. And you're in a short trade with absolutely nothing in the way on the large chart. And you're in a short trade from the area where the market is most likely to continue. So the process is the same, whether it's a long or a short. The reversal bar begins the pullback. The reversal bar is not your entry. That has you looking for your triggers, large and synthetic, and then the areas within. Your window of opportunity, the point where the small crowd is most likely to fail, lies between the highest point of support and the lowest point of support inside, all caps, of favorable large triggers. Any line beyond the triggers, and you're going to hear me call this the wrong side of the triggers. Any line beyond the correction point where we expect price to return, guys, this is not a part of your window. This is not where we want the market to be. This is exactly where the market should not go. So for a long trade, highest level of support to the lowest level of support inside of favorable large triggers. For a short trade, lowest point of resistance to the highest point of resistance inside of favorable large triggers. And guess what? I've got one line. I've got one point to create a bounce, guys, and that's exactly where it happens from. My entry was 2 ticks below it to make sure that I didn't miss it. And guys, this is your entry. Any of these lines beyond the triggers, on the wrong side of the triggers, that's not a part of the equation, guys. This is where the market should not go. And this is your entry. So all we've done so far this morning is we have identified momentum on the large chart. We have determined that there's nothing in the way on the large chart, and we've pinpointed exactly where the small crowd is most likely to fail. And by learning this lesson, where the small crowd is most likely to fail, that's how we're going to determine the first stop placement, because your first stop placement when you enter the high probability trend trade will be where the market should not go, beyond those trigger lines, beyond those areas. And your initial stop will generally be 4 to 5 ticks on the other side of the trigger lines. And this is a constant, guys, where the market shouldn't go. Use the language. But the cool thing is, with all those advantages, you're most likely to get a reversal bar in the direction of your trade. And at that point, you'll put your stop 2 ticks above it or 2 ticks below it for a long, and you're going to be able to reduce risk long before you ever take profits, guys. And great entries create manageable trades. So I'm going to encourage you guys, especially my new ones, learn the pattern. Focus on the pattern. Spend a little time learning how to recognize momentum so you never trade without it. Understand the concept of a clear path, room to the targets, so you never get stopped out trading into those lines. And then we talked about how those tails were nothing more than the pullback, guys. You can go back and study the high probability trend trade by circling these tails and seeing if it lines up with areas inside of favorable large triggers. If it does, this is the look. This is the pattern, guys. That's the one you want to snap a picture of and get it into your favorite looks. So you never miss this pattern. So you always know what the market is doing when it's time to look for a trade. And guys, the cool thing is the more pictures you take of that look, the easier it becomes, the slower the market moves. So it's not necessarily taking the trades that's going to set you up for success, guys. It's the recognition of the pattern that's going to almost slow the market down, that's going to create that confidence. So are there any questions about the high probability trend trade? Are there any questions about momentum, a clear path, an entry area? The easiest way to do this, the fastest way to get to where you want to be, is to focus on learning these very simple patterns, guys, individually. Pictures create recognition. Recognition comes through repetition, guys. Take 25 pictures of strong and weak triggers. Never confuse the two. Best thing you can do for yourself. Take pictures of a clear path. Take pictures of a termination condition. Know the difference. Go find those entries. Take pictures of them. Know exactly what it looks like. But the idea is, don't just take pictures, right? Annotate. Write on your charts. The more you write on your charts, the more you create a connection between the rule and the picture of the rule being met, between the advantage and what that advantage means to you. So make sure you do that for each individual picture. And guys, at the end of, 140 pictures, you're going to know exactly what it is you're looking for, and it's going to be like the market's moving in slow motion. This is a very ignored drill, and guys, there's a whole section dedicated to it on the spreadsheet, and I've done a lot of the work for you. Learning to day trade, learning to read indicators, guys, having a process that can make you hundreds of thousands of dollars a year from the comfort of your own home, it takes a little work. This is the easiest way to get work done. And then I'm going to give you the high probability trend trade checklist. This breaks down the rules for the high probability trend trade so that you can see them visually. The first one is that strong top or bottom we talked about when a termination reverses the market. This isn't mandatory for the high probability trend trade, but it's definitely going to give you some warm fuzzies because, man, the stuff that happens after these is typically more likely to win. There's a picture of odds favorable momentum and of weak triggers, so you should never get the two confused. There is the termination condition. There's the potential to break, and then there's the broken area, and exactly what it's going to look like on a chart, as well as those entry points, guys, all the way down to where your limit order goes. And then the second page of this is something that you can print out and put on your desktop. You can police yourself. You can write these rules on the chart, guys. You can make sure that you're giving yourself these advantages. And the cool thing is, and what's going to happen is you're going to stop asking, hey, Mark, was this a good trade? You're going to look at your trade and you're going to say, I had momentum, the path was clear, and look at this entry at an area inside of favorable large triggers. This is a trade that typically wins 70 to 80% of the time. And guys, when it doesn't, and 20 to 30% of the time it won't, you're going to know that you didn't break a rule. You're going to know that you didn't do anything wrong, and you're going to accept that as a normal part of trading, guys. You've got to develop the confidence. And that confidence is going to come from a very simple plan, from keeping it very basic, guys. And this is the KISS plan, and I give this out every day. The KISS plan is a stepping stone in your learning journey. And this really does two things, guys. For the brand new user, it keeps you focused on the best of the best. It optimizes your chances of success with the high probability trend trade. And then ultimately, it optimizes your chances of success with that 50-50 trade, that potential to break. This is the one that creates confidence. This is the one that teaches you to read your indicators. And for you guys that have been with me a while, and maybe you're not where you want to be yet, this is the one that keeps you focused on those advantages, focusing on rules rather than your read. Because your chart reading is designed to let you know that rules are met. Your chart reading is going to create opinions, and it's imperative that you hold true, making sure you have a statistical advantage every time you enter the market. Through simulation, study, class feedback, and continuous practice, ladies and gentlemen, you will create your own plan. There's no doubt in my mind. You will create a plan that's tailored to your goals based on your ability reading the indicators. That comes in time. Until you have the ability to read your charts, I'm going to give you every one of these in just a second, Jay. I drop them all in the room as PDFs. So even if you don't have Microsoft Word, you'll have access to all of them. Give me just a second to go through it, and I'm going to dump everything in the room for you. You're going to have everything that you need, brother. This is the beginning. This is the foundation, guys. And the simple plan for consistency, don't fight the large chart. One of my favorite pictures is how to commit financial suicide, guys, in one easy step. My brother wrote this, bestseller, fictitiously. Chapter 1, warning signs your friends are in trouble, guys. They're trading against strong triggers. If you're fighting the momentum on a large chart, you're setting yourself up for failure, guys. The people that have more, do more than you, they created that momentum, and they're not going to let one person beat it. Chapter 2, trading in determination conditions. So this is kind of a funny way of reminding you guys the two most common problems new users face, and the easiest way to circumvent them is to never fight the large chart. Define your entry, because great entries become manageable trades. And then, guys, your management is the second piece of the puzzle. Management is where you are going to pucker up so hard you're going to put a pleat in your seat, because now you have something to lose. And as important as it is to keep your entry very mechanical, very rules-based, it's equally as important as a brand new user to let your management be as basic as possible, as mechanical as possible, as if-then as possible. And everything in your management plan is dependent on your ability to find your entry, that point where the market is most likely to continue. And then your initial stop is right where the market shouldn't go, 4 or 5 ticks. And you've got two options. It's either going to stop you out, which is normal, it's part of it, or it's going to give you that reversal bar in the direction of your trade, that down bar. When everything on the small chart was going up, that fight from the small crowd, it hits an area, it bounces, and now we're going in the direction of the trade. This will be your first stop movement, 2 ticks above that reversal bar. And then you're going to sit on your hands, you're going to put them on your head, you're going to pick up the cat, whatever you have to do. Take your hands off the mouse. It's either going to stop you out for a smaller loser, or it's going to hit your first target. And guys, your first target in the KISS plan is $100 away from your entry. $100. Now, I can hear some of you saying right now, Mark, I can't do a damn thing with $100. $100 isn't going to make me rich. Guys, there's not one person in this room that wouldn't bend over and pick up $100 if you saw it on the ground. Don't be such a money snob. $100 is amazing. And $100, guys, it creates confidence. You're a winner. You just had success. The money's in your account. Children are singing songs about you. I mean, you're stoked. And you're going to move your stop to break even. And you're going to say to yourself, not only did I just get paid, but I'm also going to make sure that I don't lose anything. And guys, don't make it super tight. They're going to come get you. Break even is really a little closer than it needs to be, but you'll create a plan for management once you get some reps in. But until you do, break even makes it so that you can trust the large chart momentum. It teaches you to hold your position when the advantages are there. And your second target is only $200 away from the entry, guys, which means that if you take the highest probability trend trade, you enter at the point where the market is most likely to continue. You put your stop 2 ticks above it and let it hit the first target, go break even, and let it hit the second, guys. That's a $300 trade. $300 in your pocket, in your wallet, in your account, however you want to think about it. Why don't we move stops too quick? Look at these little tails. Look at these little fluctuations on the small chart, guys. It's a tiny little chart. That fight's going to happen. You've got to give it room. But $300, this is my favorite printout. This is the one that people just don't even think about. $300 a day, if that's the best you do every day. And guys, I did that by 7 a.m. this morning. That's $75,000 a year. How crazy is that? It only takes $300 a day to make $75,000 a year, guys. One successful trade a day. You're going to be able to do much better than that, guys. $500 a day is $126,000. When you get up to $1,000 a day, it's $252,000. And one of the great things about trading futures, guys, and about what Nexgen is doing is John's programmers are almost done building a trade copier. And there are trade copiers available. You could take $100 a day and let that be all you did and copy it across 10 accounts. And that's $1,000 a day. That's $250,000 a year from one trade at $100. And this is what we're doing, guys. You have to define what your goals are. I'm working with a friend, and they keep holding beyond the targets, and then they keep giving it back. Guys, the goal is to get paid, and you don't have to get paid a lot to be incredibly successful. In the futures market, you've got to temper your greed, and you've got to temper your fear. And every time you sit down to trade, you have to know why you're going to enter. It's clearly defined in the KISS plan for new users, and you have to know why you will exit. And once again, it is clearly defined for new users in the KISS plan. So what have we done? We've given you the looks and taught you how to study. I've given you the checklist so that you can police yourself and know what to write on the chart. I've given you a plan to optimize your chances of success. I've shown you that you don't have to make all the money to make amazing money. And I'm reminding you, you have to know why you'll enter and why you'll exit. I've given you a plan for both. And now your job is to commit to having the rules met. You're teaching yourself from day one that you have two options. It's either rules met or not, and only one of them puts you in a trade. Rules are patterns proven to win more than they lose. That's it. It's a pattern that's proven to win more than it loses, which means that it will lose, but if you're consistent, you should win more than you lose. Your process yields the results, ladies and gentlemen. I can't stress this enough. You're learning how to win. You're learning how to get paid. There's a very deliberate process to get you to this point. It's no different than going to the batting cages or the driving range or shooting slap shots or free throws, guys. You're creating the muscle memory to get you where you want to be. And your rules are going to help remove the emotion with trading, guys. The more you trust your rules, the less you're going to be emotional, the more pragmatic you'll be. So for brand new users, that's it. That's where it stops. You're in a high probability trend trade and the KISS plan gets you out. But you're going to grow as you add trades. There's going to be different management rules. So the more basic you keep it in the beginning, the easier it's going to be to remember your rules. And that's my first hour, guys. It's 9:58 a.m. And we have talked about 3 rules, creating one trade, giving you a statistical advantage. Are there any questions about this high probability trend trade? You guys feel pretty good about it? Anyone can do it. I believe it. Anyone can do it. And then Jay, there's everything. I just dropped it in the room. There's that exit conditions. There's the high probability trend trade checklist. There's the KISS plan. There is my PowerPoint that I use to teach, put into a PDF. There's that chart reading 101. There's that daily goals. And then one more time, just for grins, guys, I'm going to drop my spreadsheet in there. Start filling this thing out. That's how you're going to get to where you want to be. And that's my first hour, guys. It's the same hour every hour. And the reason I do that, and I love sharing this, I wrote this once because someone got upset with me because they're like, I need more. You don't need more. This classroom is designed to teach you 3 rules, to turn you into a chart reader. Guys, there's a million ways to make money with this software, but you have to have a foundation. You have to understand some basic concepts. So once you recognize momentum, once you understand the clear path, guys, you have enough to create a trading plan to be profitable. But until you do, and this is the big deal, until you do, the high probability trend trade gives you a trade that embraces those advantages that you're learning and has the potential to win 70 to 80% of the time. It's a trade that helps you recognize that momentum in a clear path. It's a trade that builds confidence in those advantages. And the high probability trend trade is not your only trade. It's your first trade. Learn it and the possibilities seem endless. So the first hour is designed to teach you those things, guys. The second hour, the next 2 hours of class are devoted to your questions. I can't stress this enough. You guys make this class great in the second hours by your pictures, through your questions, through the discussions that we have. And every time you post, guys, it's like a private session with me. Every time you post, it's an opportunity to get a little bit better, a little bit smarter. And we're going to use Tom's as an example so we can answer his question as well. And then Tom posts in the room, and notice that all he has is a question. It's not a trade. This is perfect. He says, is this the gap theory? Is this red fib just a coincidence? Well, this is a couple different things, Tom. First and foremost, do you see how price reached resistance and absolutely none of the triggers broke through? That alone should be enough to keep you out of the trade, right? I don't have a clear path. It's clearly defined. It's right there in front of me. And it pushes all the way back. This is almost the gap theory, Tom. And what the gap theory is, guys, it's nothing more than this idea that price returns to the large triggers. And it takes that idea that price returns to the large triggers. Whoops. And it says that if I hit an area, whether it's a fib, a mid-band, yellow 1-to-1s, divergence highs, and the large triggers don't come along for the ride. If the market is going up and my large triggers are below that reversal bar marker when it hits something, it just says no long trades because price is likely to close the gap to those large triggers. And this phenomenon happens all day long, guys. You're going to see it on every market. You're going to see it on every time frame. And the gap theory just says, hey, price is likely to snap back to those triggers. If I hit this red line, Tom, this looks exactly like yours, and the large triggers don't follow, don't go long between these large triggers and the top of price. It's likely to run you right over. And you see this all the time. Where's the other one that shows it actually after? Price reaches support. It reaches a mid-band. The large triggers don't follow, and there's like a sucking noise as price pulls back to those large triggers. And so the gap theory, Tom, you were close on that one. The large triggers were a little bit closer than a full bar away, but the termination condition kept you out. I think one of the easiest ways to begin to recognize it, Tom, is open up your large chart and scroll back. And that's the one that you showed me, and that was about as close as you can get without it being true. Here we hit areas, price closes back to the large triggers. Even with that momentum, it says don't go long. And let's see if we can find another example, and I'm sure that they're somewhere. Price reaches resistance. See how the large triggers are a full bar away? Absolutely no reason to believe that market's going to continue up until it closes the gap. So once again, guys, when is the mid-band a termination condition? When the large triggers are a full bar away. Your best bet for study isn't to trade and hope that you pick it up in the middle of that anxiety-ridden moment. Go back and study the pattern. So Tom, Go back and find 10 instances and you'll go, that's my look. I know exactly what I'm looking for. And then you can come to the spreadsheet that I gave you, and under client trades, if you go to patterns and termination conditions, there's probably 25 pictures of the gap theory in here. Some of them I even stole from you. There's a gap theory, ba-boom, and there it is again, ba-boom. So great question. And guys, this is how you get your answers. Drop them in the room, ask those questions, and I promise you I will give you the answer. But what I'm going to do right now, and what I encourage all you guys to do, take 5 minutes, get up and walk away from your screen, especially if you haven't had the rules met in a minute. Because the longer you stare at it, guys, you're going to start to get bored and you're going to fabricate some stuff. So there's crude oil cranking to the downside. I've got weak triggers, but a clear path. And I really don't have any areas inside of triggers, which means I have no idea where that market is most likely to continue. Here I had all sorts of strength, and I had a clear path, and I'll be damned. Right off the mid-band, right inside of triggers, and that thing fell out of bed. Can you guys, and this is my best, you can give me a Y for a yes or an H for a hallelujah. This is your pattern. This is what we're looking for as the brand new user. Jay, do you see it, brother? Watch this. Let me blow it up. Separation between the small and large. Momentum. Didn't reach that blue line, clear path. And look where it pulled back to. Right to that mid-band inside of favorable large triggers. Guys, your job, if you're a brand new user, is to take this picture and keep it simple. What am I looking for? I'm looking for strong triggers. Even if my font is black, how ridiculous is that? Why did that happen? Let's make that font so we can actually see it, and maybe a little bigger. So we have strong triggers. We have a clear path. And guys, this is where language is important. Pull back to an area inside of triggers. This is the one that you should never miss, ladies and gentlemen. This is the trade that you're committing to memory so that you can make your money. This should go in your favorite looks, and you should study this look. Perfect short. So when I come back, we're going to go back and we're going to start looking at the pictures that you guys have posted. We're going to talk about what you see, what I see. We're going to talk about momentum, clear path, and entry area. And guys, they are killing it to the downside in crude oil. And it looks like they're doing the same in the S&P. And look at this. 1, 2, 3 divergences in the same price range. Holy smokes. And then, are you kidding me? Man. I'll be back in 5 minutes, guys. Go stretch your legs. at it, just to reiterate why we don't trade into lines. Because these lines have the potential to stop the market, guys. These lines have the potential to create an untradeable bounce. And great googly moogly, these lines take away your advantage of a clear path, guys. And there's too many opportunities between them to feel like you have to trade into them. So I'm going to scroll up to the top of the room now. We're going to start talking about the pictures that were posted, the questions that people have. We're going to look at them and see what's going on. Gino got us going last night late, but we're going to look at it anyway. Check it out, guys. Odds favorable momentum on the large chart. Clear path on the large chart. Perfect pullback right to the mid band, right at the trigger lines. And correct stop placement keeps him in the trade. Notice that it didn't go beyond those triggers. He's still good. And then he gets paid on the way down. Gino, this is beautiful trade. And you said that your entry was on the wrong side, but your entry was 100% perfect. A tick or two below that lowest point of resistance. You killed it, dude. What a great trade. What a great trade. Nice management, too. All right. Cheetah. I'm not sure if Cheetah's in here. Odds favorable momentum. Absolutely. Definitely not a clear path. Trading directly into Fibonacci support. Guys, this is a tough trade. There's a lot of momentum, and he's basically saying, I hope it goes, right? And that's a lot of risk. That is $260 per contract, jumping in at the very bottom of the move. And guys, this is not a way to make money. These areas create bounces all the time. That's a tough look. I'm curious how that one turned out. And then Andy, termination, everything rolls, odds favorable. You missed the perfect entry, I guess, right at the areas. You get in, nice one, get out of trouble, and then keep it tight. Nice job, Andy. Nice job. And then Ron comes in, and Ron says, let price clear trouble. Odds favorable momentum and a clear path. And then Ron, is it just me, or did you anticipate the break of trouble and get in on the bar that hadn't quite cleared the fib? Gonna get you on this, Ron. This is awesome, though, guys. This is momentum and a clear path. It's always just me. And then he gets in, and he gets out with his paycheck, guys. And that's his goal. 4 lot, $550 to start the day. Absolutely beautiful. And let me show you Exhibit A. Is once you have a plan, once you understand the rules, once you can execute the rules, the plan puts you in position. And guys, this was my trade that I learned from Ron. I let price clear the area. I got in, and I got paid almost exactly to the tick, same as Ron. Because there's a set of rules, and all it was following rules. But Ron taught me that trade. It's a pretty good one. All right, Steve Diego, not a strong top. Steve, help me with your thought process on this. Are you in here? So when you say missed by a tick with divergence, what was missed by a tick? The divergence line? I want to make sure I understand your read. Okay, so in order to have a strong top, let me go through, I'm going to write the rules. So in order to have a strong top, first, price reaches resistance and no triggers get beyond the area. And this is the first thing that has to happen, Steve. And this is your area. Whoops. This is your area. And the triggers definitely got above it. Do you see it? And then the second thing that has to happen is the large triggers must roll from green to red. So there's your roll. But because the triggers got through, we can't call this one a strong top. And then what happens is people see this divergence line and they think to themselves, oh, cool. There's that line. It must be a strong top. And is that what you did, Steve, possibly? Because that's what I did a lot in the beginning. Is I would say, oh, there's that divergence. It's a strong top. And then, but what happens is the way divergence is created, guys, and let me go to the instructions. Are you with me so far, Steve? And this is a great lesson for everybody on strong tops and bottoms. Those divergences, I've got a good picture of it here. When the market goes down and comes up, right about the middle of that third bar is when the calculations are done with your software, and that's when this blue line will print. Really doesn't happen until all the way up here. So this isn't what we would consider a strong bottom because the trigger lines get through support. But what happens is the buyers steal the momentum from the sellers, and we see that visually with this line. And then that line will extend, and if price reaches that line and the triggers stay above, now we have that termination condition that none of the triggers have gotten through. And then when that creates the reversal, then we're there. I feel like the smalls got through pretty clearly. And this may be just one of those in the moment things, but do you see how both lines of the small triggers make it above? Awesome, Adriana, great day. So this negates it from being a strong top, Steve. It doesn't mean that there won't be a great trade after. It just means that we can't call it a strong top. Because both lines of the smalls got above. And then let's get into the trade. Cool. Reaches support. Smalls break through. Large don't. Divergence prints. And you've got those split triggers, right? By the time both small trigger lines cleared the fib on the 13.2, price was approaching the upper area of the split triggers on the 5.1, went short on the confirmation bar, and made money. And Steve, this is brilliant. You let it close the gap to the large triggers. You know that those split triggers create indecision. With that level of momentum and the potential to break, you wait for confirmation. It looks like it slipped you a little bit, absolutely. But because of the momentum, because of the direction, because of the potential to break, and because of your awesome patience, you get paid all the way down. I love everything about this trade, Steve. And whether this was a stronger top or bottom didn't have anything to do with it, which is kind of cool. But dude, rock star, understanding that price corrects to the large triggers, understanding that it isn't perfect, and insisting on confirmation. I like everything about your trade, Steve. Nicely done. Great execution. Way to get paid. And then Pete, we'll click on all three of them. Triggers rolled. Everything says down 50-50. Pete waits for it to get to the correct side of the fib, takes his entry, and then gets paid, right? And he says, in hindsight, maybe shouldn't be that tight when the large chart looks like this. Guys, this is one of my favorite looks, and I'm going to say this real quick. Instead of trading into the fibs, Pete trades away from the fibs, lets them clear, and then goes, and it creates a much easier trade. And that is experience coming in. These lines can stop the market. So he says, I love the look. It's only the potential. Let me get to the business side of that fib. Nicely done, Pete. And I think I closed out the other one. And then everything says down. The path is clear. And you get to the correct side of things again. And make money again. And it sure looks like $3,700 here in the morning at 2:15 a.m. That doesn't suck. And then finally, why you take profits. Because the goal is to get paid, right, Pete? Because things bounce when momentum goes away. Absolutely gorgeous trading this morning, Pete. Nicely done. Guys, Pete's been with us a while. Pete's got a solid plan. His trades won't always look like your trades. But you'll notice that all of his trades end up looking the same. And then Andy, weak top, odds favorable, clear path, perfect entry, money, money. Nice job, Andy. What a great trade. Miss Adriana, it gave you the small entry, perfect, right to the fib, same trade. Beautiful money. Odds favorable, clear path. So Adriana, if you're out zipping around on your scooter, nicely done. Odds favorable, clear path, in at the area inside of favorable large triggers, out at the fib. 100% textbook. And then Pete, momentum down, I disagree. Smalls riding lower large, not so much. But definitely smashing through termination conditions. And then the entry that you take is in between the trouble spots, right on the pullback to the fib. So great usage. Everything's down. It's a strong trending market. And once support breaks, it becomes resistance. You know that. And that resistance is right at the trigger lines. And that was a pretty easy one for you, I think. In at 95. Oh, you got stopped out right at the fib. And then retake the entry and take it all the way down. Nice job, Pete. Not momentum, though. Those are weak triggers, but you're very much a strong trending market. And newer users, if I'm going too fast, if you need me to slow down, let me know. A lot of these are just people that have been with me for a while, and we're going through and I'm covering these advantages. So if you have questions, man, don't hesitate. Don't hesitate to ask, please. Gino, got in on the bounce. Waited for the small triggers to roll. Pure momentum. Okay, so you get the termination condition. Small triggers roll up. You're in on the correct side of them, and you run it all the way up. This is beautiful, Gino. It's counter trend, isn't it? That is some counter trend trading, Gino. But here's the cool thing. You're on the correct side of the small. This is such a great read, dude. When will I go counter trend? When it's coming from a termination and my triggers roll. Nicely done. Guys, that's advanced. Gino, you did wait for the triggers. And then I believe this is Paul. Everything's down with a clear path. You hope the fib holds, and it does. Beautiful trade. Ron says he sure does love momentum. Everything says down, clear path. Money all the way down. Gosh, you guys are putting on a clinic today. Base hits pay bills. Everything says down. And this is kind of cool. Ron doesn't get in on the pullbacks. He lets it clear divergence and says, we're going, let's go. Base hits, pay bills, and buy chili dogs. Amen. How are we doing, guys? Are you guys noticing that momentum and a clear path seems to be the recipe for finding success? That's what I want you guys to get out of these people's charts more than anything. You don't have to trade like Ron's trades, or you don't have to trade like Paul trades, guys. But when the large chart has momentum, when there's nothing in the way, it's hard to stop that market. It really is. And you guys are just killing it. Then Muser, a stop out lesson from earlier. Medium probability trend trade. No, that is odds. That's high probability all day long, Muser. You have momentum and you have a clear path. You are high probability all day long on this one. You wait for the pullback to the area, the first target's hit, and you moved your stop down too far and paid the price. Should have left it break even. Class lesson from earlier. Second target was at the fib. Muser, it's an awesome trade. You had the golden goose and you turned her into fried chicken. But guys, this is why arbitrary stop placement, it's like they have cameras. It's like they know. And Muser, I wish I could say that I've never done that. But if I had a nickel for every time those assholes got me high tick and then finished the move because I moved my stop too tight, I would have a sack of nickels. I would be dangerous in a nickel swinging sack fight. It's a good lesson though, right? You have to do this and you're playing with management. You didn't lose any money, but you cost yourself a little bit. But you've got to take these lessons. This is one of the most important things, guys. You have to be willing to make mistakes. Just commit yourself to learning from them, right? Put them in the room. And the fact, and Muser, this is what I'm so happy about. The fact that you took the time to type it out, exactly what you should have done, what happened, you're committing yourself to that memory. You're committing yourself to that lesson. And I think that's amazing. And then Paul, you're just in a strong trending market, keep selling the mid band till it doesn't work, right? When the market is falling out of bed and they're absolutely killing it, keep selling that mid band until it doesn't work. Eventually it won't work. But that wasn't the one. Nicely done. GWC, how you been? Nice to see you. Termination. Triggers wide on all the charts. You put not a termination. I'm not sure what that... I think that arrow's in the wrong spot. And you just let it clear the fib at 85.20 and take it right down to the next trouble spot. Uh-oh. Ron, have a good one, man. Enjoy your afternoon. Great trading today, dude. Especially that one that looked like mine. And then, yeah, lots of news tomorrow, and we'll see what the debate does tonight. GWC, this is awesome, dude. Get to the right side of trouble and take it to the next area. Momentum for the win. And then Paul, keep selling the mid band until it doesn't work. And that's all the pictures, guys. We made it through all of them. Tom, did you see your gap theory again? Weak triggers, and there's your retracement. It pushes all the way up to resistance. Large triggers don't follow. And it closes the gap, right? And if you thought you were going to get away with one and go long at this mid band, it got you. And then it closes the gap. Everything rolls. You get one of those 50-50 trades. Who's going to show me the long from 78? Did anybody catch that? It was a little tight. How's that? Is that better? Sorry, I had a little squeezed. What do we think about that potential to break with momentum, guys? Right back to the mid band inside of triggers. Anybody catch that one? Do you guys see it? Am I making this up? I've had people accuse me of handpicking pictures for the lessons. You got some of it, Gino? Nice. Hey, Pineski, it stopped working, brother. Please do. It kept working, and that's the one that didn't, guys. All the way down. You got to be willing to take that one. In that strong trending market, eventually it's going to stop going down, guys. What do you guys think? Do you think somebody's manipulating the market to make gas prices lower to offset the desire for green energy? Ooh, if you watch the news, I don't care. I don't care why it's going down. I'm just waiting for patterns. So here's where we get to the sticky part of the classroom, guys. We've looked at every picture that you guys have posted. I've given every lesson off of my syllabus. This is where I have to ask you, what do you want to talk about? What's a concept you need a little help with? What's a concept that we can clear up for you? What can I do for you, guys? You are in a private session with me. There are 38 people, and each of you has the potential to get my undivided attention on anything you want to talk about. All you have to do is post it in the room. It's hard to do that, isn't it? Hard to make yourself vulnerable. To post in the room and to say, hey, I don't know something. Rob knows this story. Does anyone know what a camshaft is? Some of you mechanical people? Some of them do. Some of them push right. So, true story. And Jay, you've never heard this one. When I was 25, I went to the Motorcycle Mechanics Institute in Phoenix, Arizona, and I was going to learn how to work on motorcycles. I'd been riding forever, and I wanted to make that a career. So I go, and they make you go through a theory class first. And one of the things is I didn't have any idea how engines worked. I didn't know the difference between a two-stroke, a four-stroke. I didn't know what a camshaft was. And one of the things that happens when you go to a trade school is a lot of people are there on the prison release system and GI bills and stuff like that. So I'm sitting in a theory room that is full of ex-Marines and Hells Angels. Meth dealer. It's not the most savory group of people. And the instructor's talking about camshafts. And everybody's like, yeah, camshafts. And I raise my hand in front of 60 people. And I say, hey, what's a camshaft? And the entire class erupts in laughter. This asshole doesn't know what a camshaft is. And you know, it's funny because it was so hard for me to ask that question. It was so hard for me to let 60 people who I would never see again after this or really had no impact on my life at all. I didn't want them to know that I was trying to learn something new, which is weird because that's why we go to school. And the instructor told me what a camshaft was. And at the end of the year, when I'm done, I'm top of my class. I can rebuild an engine. I can diagnose problems. And guys, I got to where I wanted to be because I laid down that foundation, because I made myself a little bit vulnerable and I put myself in a position where I insisted on asking questions if I wasn't sure, because the reality of it was I didn't give a shit about anybody in that classroom other than me. I have to pay my bills, right? I have to learn my skills. So if you have a question, guys, if you're curious about something, don't hold back, because chances are more people have that question. And get your information. Be selfish with the time in this classroom. This is your time. And there's nothing off limits. Beautiful, Gino. Best look ever. Perfect entry. Out at the first sign of trouble. And then, was that preset or did you chicken out? Either one's good. You don't have to answer. Guys, I'm going to give you the coolest lesson. Gino, this is going to help you, brother. Guys, if you're in this trade, the pink line is your small triggers. As long as I don't close on the wrong side of these small triggers, snag it's being a POS. Jen, what you can do is go to TechSmith Capture real quick and grab that one, download it. Piece of poo. Language. Australians are so crass. But Gino, this is a pretty cool lesson that helps with holding for those bigger ones. Is as long as it doesn't close on the wrong side of those triggers. So when my large chart's screaming and hasn't hit an area yet, that helps me. Not inside. That's the one. And you'll give a little bit back, right? But if you are close to the fib, get your target there and just, I'll chase a reversal bar marker up. And if I want to see how far it's going to go because of momentum, I'll just keep following it up. So something to look at. Because check it out. It never closed on the wrong side of the smalls until right here. Do you see it, Gino? And sure enough, it went up. And it never closed on the wrong side of the smalls until here. And sure enough, it kept going down. So I'm a huge fan, get paid at lines, right? But if you're starting to get nervous on your way to the line, remember that little lesson. That'll help. Does that make sense? Andy used that a lot a while back. Oh, right on. Totally cool. And Gino, then that is smart trading. That's intelligent trading. You still do, Andy? I love it. Hey, Jen, if Snagit's giving you troubles, sometimes I'll kill it from the task manager. And I've had times where it's just been crazy. You can go, and I have both on my computer. I have the TechSmith too. But usually killing it from the task manager fixes whatever's going on because it shuts it down completely. Shuts it down completely. So hopefully that helps out a little bit. Andy, perfect trade. Look at that. Andy, I love seeing you hold for big moves when there's big moves to be there. What a great job. And then it missed you for a tick on the buy-in, but that's okay because it was a 50-50 with divergence, Andy. And Gino, you got another one funded today? Congratulations. Waxing triggers. Great trade. Morgan. 50-50, no divergence, great entry, good stop placement, quick profits, break even. Outstanding. Morgan, that's how you take a 50-50, brother. It's not a home run trade. Great stop. Great stop placement, and it lets you get paid on the trade. Beautiful, dude. Starting to find your flow a little bit. Getting your mojo down, brother. Nicely done. Momentum and clear path for the win, guys. And why don't we trade in determination conditions? Because it sucks the life right out of your trades. Guys, here we go. Here's a cool little pattern. It will. Gets easier all the time. Morgan, have you noticed that since you slowed down and started looking for less, you're finding more? That's one of the best lessons I ever got. When I stopped looking for all the trades, I could start finding the right trades. And that's a pretty real phenomenon. So guys, here's a cool pattern. When you're not coming from a strong bottom. Yeah, it is, Paul, isn't it? It's like trying to hit a bunker shot with the driver. You can't do that, Gino? Those are my best bunker shots. I played a course on Sunday. The bunkers were so bad, they said, just throw it out of there. Don't take a stroke. So guys, when I have not a strong bottom, When my reversal doesn't come from a termination, the mid band and any areas around it are more likely to hold. There's a pattern. That's something you can put into your book. So when I'm thinking about this 50-50, right? Your mother-in-law putts out of the sand sometimes. That's awesome. John and I played with a couple when I was in Florida, and this dude putted from 70 yards off of the green and put it like within 3 feet. It was pretty awesome. I finally learned how to hit a bunker shot. Guys, when price does not turn in an area, these areas are more likely to hold. This is a picture and a pattern that you can put into your spreadsheet for sure. And now we're just in a holding pattern. So Gino, I told you that I had my best round like a week or two ago. Shot an 83. It was awesome. I went and shot a 95 on Sunday. It was sad. Oh, I remember this one. 102. That's a good one. I didn't eat enough breakfast. I got tired and hungry. And a lot of 3-putts on the front 9. Greens in regulation and 3-putts happened 4 times on the front 9. It was sad. It was sad, but the weather was perfect. So I was as happy as I could be. Yeah, I got you, Jen. We're good. All right, you ready for some lessons? You feel like learning today? We're going to do a couple different lessons. This is a higher divergence, not a pivot stop out. No, you're okay. Let me have some fun with it. I can read charts. Does that make sense? Here's a divergence. Here's a higher divergence. A pivot stop out would have meant that price came just below it and then back up. But that higher divergence is still good. And then everything says up. And you try to do the jump in trade right here. Take care, Paul. And I know exactly what you were thinking. Everything says up. We're good. Let me jump in. Jen, the one thing on those jump in trades, have a clear path. Can everybody hear me? Give me a Y if you can hear me, please. Just for Gary, so he sees that sea of Ys. There's your sound check, Gary. So Jen, there's a couple things on this trade, and I'm assuming that I know what trade you're looking for. For what you're talking about, the back of the bar needs to clear price, and it looks like it may have. I can't tell if it did or not. It didn't. It didn't yet. And you want that clear path. This is one that's just better off avoided, I think. Small triggers are below it, directly into 1-to-1s. These are more likely than not to create a bounce. And then you nail the trend trade, 100%. And you get out of trouble, and that's perfect. But I think this is the one. You knew that it could turn into a trend trade. And for you guys that are just jumping in, if the large chart is awesome, your momentum trade that fails very often turns into a trend trade. And that's exactly what Jen knew. So she didn't panic. She just added on to her position right at the trend trade. I love this. I don't know that I like this one, but I like your ability to read the charts to turn it into a 4 lot from 78.50 up to 84 or 82.5. Beautiful trading, Jen. Nicely done. C-Dub. It's just fun to say. Your name sounds like a rave. All right, so C-Dub, momentum is great. You hit the mid band, but the large triggers aren't a full bar away. No problem. Mid-band's not a termination. Everything says down. You take the pullback, split triggers, so you use the area. Get stopped out. I don't know why you got stopped out so high. They gave you a reversal bar and they said, C-dub, let's just take a little loser, right? And then it pushes all the way up to the termination and then it goes. C-dub, it happens sometimes. Why didn't you think it would bounce off the mid-band? Can I ask you that? Okay. So one of the things, C-dub, it goes back to what I just said over here. Let me go to the other chart. When it's not a good top or bottom, the mid-band's more likely to create a bounce. That's your first spot for a bounce. And on your picture, you weren't coming from a strong top, and the mid-band created a bounce. And it's not acting as a termination condition, but it's a bounce point. And your entry's perfect, dude. I love your entry. With this look, that momentum, large triggers closing the gap, reversal bar. I love everything about it. The only thing that I don't care for on this trade, and it's okay, I don't have to like them all, is you were in at 96 and a quarter. Your stop after this reversal bar could have been 98 and a quarter maybe. But instead you gave away an extra 2 points behind the correct stop. Does that make sense? You gave away another $150 beyond what makes sense. Just based on those basic lessons. So instead of losing $150, you lost about $300. Do you see the difference or understand the concept of using that reversal bar? Because everything up here is hope. This is pragmatic. This is mechanical. Andy, great job. $8 shy of goals. You underachiever. And this is, I think, one of the great things about the precision, C-dub and everyone else in this room, is, dude, you did everything right. And it's okay. If they come get you, dude, it's just not meant to be. You can't win every trade, but you can manage them through a very decisive set of rules so that you don't give a lot back on the ones that don't work, right? So guys, there's your termination, straight to support if you don't think they know where these lines are, and now we're pushing up. And now I have the potential to break, and I've got odds favorable momentum. And if I get a pullback, there's my potential area, but it's inside of triggers. And now I'm in a potential to break trade. My stop is 5 ticks beyond the trigger lines. My first target will be at 50. My second target will be at 60. Guys, this is a medium probability trade. This is a termination that reverses the market, that gives me odds favorable momentum, that pulled right back to an area inside of favorable large triggers. If I get a reversal bar, I'll go break even, and that also happens to be my first profit target. If I don't, they're going to come get me. Here's the bottom of the triggers. 1, 2, 3, 4, 5. I've got 7 ticks of risk on this trade, guys. It is a medium probability. It is a potential to break. Is everybody with me? And now it's out of my hands. It's either going to go or it's not. But it fits my plan. If I pull up my rules, boom, boom, boom. It's coming from a strong top or bottom. I have odds favorable on both. I didn't look at the divergence. I get in at the area. Did I have divergence? Oh, I did. I broke my rules, guys. And look at that. Divergence killed the 50-50. I broke my rules and I lost a trade. What a great lesson. Pretty cool, right? I mean, you're like, that's not cool, Mark. You lost. Who cares? I didn't follow my plan and I took a loser. And I think that's one of the healthiest things you can do. is go through, write your rules, and let's take a picture because I want you guys to see this. And this kind of validates why I give you this KISS plan and why the KISS plan says everything that it says. So I'm going to go to the 50-50 here, and let me make this a little smaller. And I'm going to take a picture. And when we talk about following rules, I'm going to put my rules right here. And I want you to see how easy trading can be when you learn your rules. Am I coming from a strong top or bottom? Absolutely yes. But you have to understand that concept to be able to mark yes. Odds favorable momentum? Yes. Odds favorable momentum? Yes. Divergence. Yeah. Guys, this is the number one killer. The number one killer of 50-50 trades, of potential to break trades. And guess what? It killed it. So much so that it says divergence at the trade. So when I annotate my charts, I have to say, I broke the rule about divergence. I'm not allowed to be surprised or angry that I lost this trade. I made a choice. I'm accountable for my actions. And then I move on. And adherence to the rules keeps me out of a loser. And guys, the biggest difference between successful traders and the people that have challenges are very often the people that can do nothing when their rules aren't met tend to find the highest level of success. The people that start to implement hope and fear and wishing and wanting, those are the people that have challenges. And then C-Dub, look at this, just like yours. They did a little stop run, and now they appear to be going up. But they appear to be going up directly into resistance without momentum. Maybe that's not my trade. So now the process starts over. Guys, that's the second hour. We made it through. Once again, I'm all out of pictures, so what I'm going to do is I'm going to take 5 minutes. I'm going to walk around. I'm going to pet my dog on the belly because she loves that. And when I come back, guys, it's your class. Tell me what we're going to talk about. I'll see you in 5 minutes. All right, guys, I am back. And then Jay, we'll get to yours after we click on the Rob show. Let's see. Where does this start? All right, 50-50 on the 13.2. Absolutely, good read. All right, Rob. Momentum looks good. Market's trading down. You don't have any areas inside of triggers, none whatsoever. And you have put 7 points of risk on this trade. And you've put all of your targets on the wrong side of the next potential termination condition. I've noticed that you didn't write any rules on your chart there. And then everything says down. Once again, not trading from areas inside of triggers, leaving an astronomical amount of risk on a trade directly into a mid-band behaving as a termination condition. Does an immature trader want to just jump off this cliff? I don't know. Large chart says up, small chart says multiple divergences in the same location. No long trades, no short trades. An immature trader tries to make a trade out of nothing. Just be patient. That's it. 3 divergences. It may stop the market. You never know. Is that 3 divergences or 2? That's 2, but it's directly from a fib. Because the small and the large get above the area is broken, Rob. But you're 2 directly into a fib. Let it break, right? Why not? Just let it break. So you got 350 of a $10,000 move. Are you mad about it? Are you pissed off? Does the market owe you more? I would say that's pretty awesome. Especially since I can't figure out what rules you're following. And you're still making money. 350 on odds favorable momentum. Pull back at area. Managed closely. Took 350. Rob's money. Amen. Everything says up. Not waiting for the area. Hoping everything holds. How'd this one turn out? So, Rob, I think that the best thing that I could tell you, and I know that it's a pain in the ass for you, write why. Talk about why you're doing what you're doing. Talk about why that 42 or that 82 stop is in place, right? Talk about why you decided to enter the market from the middle of nowhere. Talk about why you're jumping in, why you have such big stops. So what's the reasoning behind keeping 8 points of risk on this trade into a mid-band that's behaving as a termination condition, right? Does that feel like the right trade? In a market that has been railing up for 2 hours and it pulls back to a mid-band behaving as a termination condition, and you're willing to risk 8 points to make less than 3. Does that make sense if you say it out loud? I'm not going to tell you how to trade, but that seems like a problematic approach to long-term success. So get in the habit of writing why. Why am I doing what I'm doing? And guys, this isn't just for Rob. I'm just going to use Rob's chart, right? I've got momentum. I love it. That's one piece of the puzzle. I don't have a clear path. Tom, there's your termination because of the gap theory. Didn't take the trade from any areas, and I have a ridiculous amount of risk. And I think there was somebody that took it with the reversal bar. So using the understanding from rule number 3, Rob, that price typically returns to these large triggers, Doesn't it make sense to be a little patient, to see where it goes from? Maybe a reversal bar off one of those areas, I don't know. Or maybe if you took this reversal bar, then there's your risk. Take a small loss. So having a reason why, and I know that I'm just saying the same thing over and over, right? Why will you enter? Why will you exit? Can you define it? You're getting stopped out a lot. Do you think it has anything to do with not taking the right entries? Is that possible? Is it possible that you're getting stopped out a lot trading directly into termination conditions? Right? I don't know. You like to show me the entries. You never show me the end of a trade. You never show me the completion of the trade. Getting stopped out happens. Getting stopped out a lot, well, there may be a challenge. But I want you to see something, Rob, and this is just me pleading with you, pleading with you. Let me help you. Your entry doesn't make sense to me, right? Your stop doesn't make sense to me. What happened? Show me what happened. Show me how that one ended, right? Where's another one? Show me how this one ended. Because there's a lot of great information in seeing a trade come to completion, guys. And people love to show me their entries because there's no loser associated with it. I used to do the same thing. Look at my kick-ass entry. And then when it lost, I didn't bother showing that part of the picture. But sometimes on those losers, we can look at it. We go, look how it changed here. Look how not getting it in an area. And then, Rob, what if it bounced down to 54.81, right? And then started back up. We could say something clever like, dude, when you don't have areas inside of triggers, at least wait for a reversal bar. The same way this mid-band below all the triggers. Once you got a reversal bar, it went in the direction of the trade. So there's a lot of great stuff. You're not seeing entries anymore on charts. Rob, is it possible that your rules aren't met for entries? So let me ask you this. When your large chart looks like this, what does your entry look like on a small chart? And this is one of the challenges, is when the market does this, and this isn't just you, Rob, so please don't think I'm singling you out. When the market does this, and I'm like stupid 350 in the whole move, you used to post your price entry and exits, but you don't anymore now? Why would you not? Especially if you know you don't see your entries and exits. Okay, so do this for me. Check this out. Right click on your entry chart. When they rebuilt, it probably did this. Go to data series and scroll to the very bottom and make sure that plot executions so it's data series, plot executions, text and marker, and then hit apply. And that'll make sure that you can always see your entries and exits. But that's very helpful for me in order to help you. Hey, Cav, long time no see. That helps me a lot, seeing where you got in and where you got out. Because then it lets me know kind of what you're thinking and where you're thinking it. So Jen, everything said down. You jump in on the momentum, it doesn't work out, turns into a 10 trade. Right on. So yeah, put it on text and marker, Rob, and then that'll help a lot. And then out at trouble. And then it starts to break and you don't take that one. And then it starts to break and you get below everything and then you get out of trouble. Awesome. I love this. Don't trade into the fibs. Trade away from the fibs. What a great concept. Yeah, a little bit. Little bit. That one was super tight. And that one was super tight. So when you entered at 17, Jen, you had 4 ticks, right? You had 4 ticks of profit potential there. Now, I've known you long enough to know that 4 ticks is not an acceptable profit goal for you. And I know that you're working through stuff while you're learning, but this is one of the biggest things. Make sure you have room to get paid. And sometimes there isn't. You're welcome. All right, Doug. Strong triggers, clear path on large chart. All right, here comes the beating the dead horse again. Doug, one of the best lessons, I think, personally, is once price gets to the wrong side of the triggers, you have to believe that you have no idea where it's going to stop. Does that make sense? Once you're beyond that correction point, and you said should have waited with the mid-band above triggers. Yes, I agree. And this is a great lesson for everybody, because once it gets beyond that correction point, you're like, crap, where's it going to go? Where's it going to stop? And language, of course, it's Mark. Let's say it again. Language keeps you out. Areas inside. And if you really focus on that word inside, it changes the whole dynamic, and it pulls so many losers out of the equation. Large chart was beautiful, Doug. And that little bit right there just got you. And you knew it. And this is, guys, this is like that's when you know you're getting there. When you take a trade and it doesn't work, and you don't spend 5 minutes writing, damn it, this is stupid, I hate the market, this is crap. You go, wow, I should have waited for the mid-band, or I shouldn't have taken it. Rule number 3 wasn't met. That's it right there, Doug. That's when you're on your way. When you analyze a loser and you realize, oh crap, I didn't follow my rules, here's how I can do it better. Here's how I can find success more often. So I love everything about your picture, Doug. I'm sorry you took the loser, but I think it's pretty brilliant the way you did. There's room for growth. Go into that next level. Here we have a 50-50. There is no divergence. There's my line inside of triggers. I know where my stop has to go. We'll see what happens. We'll see what happens. And then Jay. So Jay, the language, brother. Areas inside of triggers. Then Josh, no trade, right? So the language, Jay, is areas inside of triggers. And I'm very specific on saying areas and not mid-band. And I know that there's people that are hearing, oh, it's the mid-band, it's the mid-band, it's the mid-band. It's not, my friend. It really isn't. The idea is that, and let me find a good picture. Here we go. Is that when price pulls back, the red box dictates where I expect price to return to, somewhere inside of these triggers. But the areas inside, whether it's a fib or a mid-band or even a yellow 1-to-1, as long as it's inside of the triggers, I expect it to create a bounce. So what we ran into on Doug's is, do you see how his mid-band, let me pop this up so it's easier to see. See how his mid-band goes to the wrong side of the triggers there? Like we expect price to come up and return to those triggers, but there's no lines inside. They find themselves beyond the triggers, on the wrong side of the triggers. This is where that indecision escalates. This is where we don't know if it's going to be that mid-band, if it's going to be this fib, that fib, the 1-to-1, if it's going to come up to this fib. So that's where where I say that phrase so often. Language becomes very important on the entries because if you always remember the phrase area inside of triggers, it keeps you from hoping on this one. And then another way you can approach this, and Doug, one of the things I didn't talk about, is maybe you are beyond the triggers and you're like, man, it still looks perfect. What a great look. The market's more likely to go down. You know what I'll do? Is I'll force the market to give me one of these reversal bars off of that area that I'm hoping holds. I'm going to force it to hold. And then once it does, well, then I can use that reversal bar to put my stop behind. So it establishes the risk and it forces the market to go in the direction of the trade. Does that make sense, Jay? So 50-50 didn't work. Josh, your divergence saved your butt. And then Jay, you asked about the 8 range chart, the market flow chart. I don't remember what the phrase was. The 8 range chart. So the market flow chart, it's just a confirmation chart. And I'm very hesitant to introduce it to new users because it's confusing. And there's a lot of information on a market flow chart. There are different bar structures, and there's all these dots, and there's all these different things, and there's these pink lines and these green lines. And to be honest with you, as a brand new user, you don't need it to be successful with the software. You don't need it to be able to take solid trades. But it's the market flow chart eventually, as you grow, as you get comfortable, as you begin to expand, what it does is it becomes this little confirmation chart. Initially, I encourage people that are trying to learn it to confirm the momentum that there is on the large chart, confirm the momentum on the small chart, and use that confirmation. It's one more person saying, yes, you do have that advantage. And then when the rules are true, and Jay, let's say hypothetically, okay, cool. So hypothetically, on this trade right here, you've got your defined entry and everything. This is where you might say, and I don't even have market flow charts built. I don't use them, but I do know how. Is you could say this, Jay, and this is how I use it. The areas are not broken. It's a medium probability trade. And while the setup looks nice, I want confirmation at the area to enter. So it's not high probability, and you're saying to yourself, I know where the market should bounce, and I've got this, but it's not the best look. I'll look for confirmation, and then Jay, that's where you would turn over to your market flow chart. Your rules are met, it looks good, but you're going to say to yourself, I'm going to force the market flow chart to give me one of these signals to enter the market. And that's how it's used initially. It's a little confirmation on a less than perfect trade, because if it's the perfect trade, hell, you don't need confirmation, right? You're just going to take the trade. So that's why when you look at the analysis page, the first thing it says, it'll initiate entries when the rules are true. So when you have momentum, when you have the clear path, and you're looking for just that little extra bit of confirmation, you can use those market flow signals, those arrows underneath bars, to get you in. And then the second one is the market flow chart produces these HVA lines. And these are high volume area lines, which means that there was a reversal bar and a breakout. And if the next bar is down, you'll get this pink line. And this is literally where the highest concentration of sellers was on that breakout. And it becomes like a little line in the sand. So I get that super high concentration line, and you'll notice that the price pulls right back to it and then continues down. And the same is true of these green lines. So we use those lines for what we call a high volume area trade. And a high volume area trade uses a termination condition, the same thing you learn in the high probability trend trade. And triggers don't break, so you've got to understand that concept. And it lets triggers roll just a little bit, and then it gives you the opportunity, using that pink line, that high volume area line, to pinpoint an entry that's a little closer to that termination. So this trade sets you up, and this is kind of the trade that happens before the trend trade. So if Fibonacci resistance holds, you may get a high volume area. This becomes your first shot at the short if the rules are met. And then when everything is strong, we look for the trend trade. And it's very much a rinse and repeat process until we reach the next fib. And then that high volume area gives you your first shot from a low. And then if everything is strong after, it turns into a termination condition. So I always encourage new users, focus on the basic rules first. Focus on finding your trend trades and understanding those concepts of momentum and the clear path. And then once you've got momentum and a clear path, once you get comfortable with looking at triggers and areas and understanding when they're likely to hold or if they have held, you'll be able to incorporate a lot more into your trading plan. And I don't teach market flow in this room, but I don't shy away from it. So if you come into the classroom with a picture and a question, I will give you everything in my knowledge, and I'm pretty good with the chart. I'm really good with the chart. I can read it and talk about it all day long. But I encourage people to keep it simple first. Absolutely. You don't have to, but I encourage people to do it. Let it be a confirmation chart initially. Jen, the trade's so nice you post it twice. I love it. You're welcome, Jay. I'll hang on, Jen. I'll be right here. Do you have the market flow chart built, Jay? Are you looking at it now as you study? What I always tell people is if they have it, let me build one for what market do I have up? I've got crude oil up. Let me build one real quick. It came with your workspace, cool. So I'm going to build an 8-range market flow chart real quick, and I'm going to see if I can find an example. And while that's loading up, we'll look at Jen's picture. So Jen, everything says up. We didn't quite reach the 1-to-1s. The momentum is the best. It has the potential to break. You get in at the area inside of favorable large triggers. You know exactly where your stop should go, and you get out. Absolutely beautiful. You're like the person in class sharing all. You are sharing all. I appreciate that. You're a little nervous with the ES? Trading it? I don't know. I think the ES and crude oil both, they flow. They flow nice. If you were on the NASDAQ, I think your nerves would be validated. ES is a good one. There's a reason that we teach on it. But I mean, that's perfect, right? That's the look. There was your termination that reversed the market. There's all your momentum. There's your perfect pullback. You knew exactly where your stop should go. And you knew that it wasn't high probability, so you got paid. Absolutely beautiful. So here's the question though, Jen. Are you ready for this one? So that is 84.50. That's 3 ticks and then another, I don't know. That's about $200. Hold on. That's about $200 on that trade. And then this one was at least another 300, if not more, 4 or 5 maybe. But you're only up 225. You have 3 computers? Okay. So you're using different computers for different markets? All right, you're off the hook. I see everything. I believe you. We have trust. We're good. But I do, guys, a lot of times I'll do this, and Jen had an answer. I'll see people show me winners, but they won't be up money. And I'm like, you know that you're robbing yourself of the best lesson. All right, so quick little market flow, Jay. I just want you to see this. I built an 8-range chart. So potential to break. You have your area. And the one thing that happens here is you get a little fluctuation before the area, but when you actually reach the area in question, you never get a market flow signal for the long. And that's one of the ways you can use it. But what I really encourage people to do is just look at your trigger lines. So when I get back to the area in question, for those of you that are using market flow, you'll notice that these triggers are strong against me. And I'm on the wrong side of the large triggers. And I can see that change happening. But when everything is down here, look at this one. Here I have momentum, right? And over here I have momentum and a pullback to a mid band. And look at that. I've got good looking smalls below the large, right at a mid band and a reversal bar off of it. It becomes a little confirmation tool, is essentially what it is. Most people find it distracting until they get some repetition with the software and understand what they're looking for. But I wanted to show you that. Morning, Ollie. Ollie, those pink 1-to-1s. I love it. I love how much you love them. You might make me change my mind about them, brother. Odds favorable. Potential to break. You almost didn't take it. And here's the cool thing. Ollie, did the fact that you knew that you would have virtually no risk on this trade affect your decision, your willingness to take it with this look? It should, right? These are things that you'll factor in when you know where your stop should go. And dude, you crushed it. What a great trade. Odds favorable momentum, potential to break. Ollie knows that divergence is a challenge, but he weighed out his advantages and made the decision to take the trade. He said, I've got a low risk entry. It's worth it to me. I love this trade, Ollie. Great job. And I love all of the annotations. And the fact that you use the word entry at the cluster, mid-band yellow 1-to-1s, when you start getting those areas inside of triggers, one on top of the other, guys, what you're seeing is like this huge psychological number, right? Not only was it strong enough to put 1-to-1s there, but the mid-band's also trending right there. And hell, if there were a fib there, that would be like the trifecta. That's everything that can create a bounce in the exact same spot inside of triggers. That's a good feeling. That's a happy feeling, without a doubt. Nice trade, Ollie. Nice trade. There's that potential to break and divergence prints, and we know that's a killer, right? And then the potential to break never fell through. Straight into a fib. Tom, there's your gap theory, right back to the large triggers. Price loves to pull back to those large triggers, guys. Tom's not even in here, and I'm talking to him. And then eventually, apparently I haven't been watching the market. There's the last one. That's the one Ollie took. That one was areas on the wrong side into a termination. And this one doesn't have areas inside. And the triggers are weakening. And you have to ask yourself, is that my best look? Am I willing to jump in and hope that it goes up? And it may. But is that your best look? So we've got about 25 minutes, guys. Is there something specific anybody wants to talk about? Got some newer names in here. Martin Sakito, how we doing, man? First couple days, it's a lot of information, and then it gets easier. Agasco 0410, how we doing? I'm looking for the names of people that don't say much because I want to make sure you're all right. Miss Clara, hopefully you're doing well. Belt, you usually show me a picture by now. That's all right. Gino, Ollie, Kenny, C-Dub. Hello, Mr. Trimper. Always good to see you in here, man. Z-Robot. Your sim ended and you're having trouble setting up a NinjaTrader account? No worries. So Belt, setting up the NinjaTrader account usually takes a couple days. Yeah, Forbes will be able to help you with that too. One thing I've heard of people doing, allegedly, is just sign up for a fresh demo with a new email account. And that'll keep you in the mix while you wait for it to come together. Exactly, Muser. I got a buddy that's on his third email right now. And yeah, so Muser, it doesn't have to come from a strong top or bottom. It just adds a little giddy up to the mix if it's coming from one. You guys notice that it didn't even make it to an area? And then it fell right back and hit the mid-band right inside. Pretty cool. There should be plans about this stuff. You're managing your ES long? I like it. I hope it goes right to the promised land for you, Steve. How cool is this? No areas inside of triggers, and then it comes right back and the mid-band ends up inside of the triggers. And sure enough, it's bouncing. There's got to be something to this, guys. You just got to learn to trust it. I'll know if it does. Well, yeah. Steve's looking for 550120. He loves Fibonacci and all the things that it means to him. A big fan of fibs. 50-50 with divergence. Just scrambled. Just scrambled. How we doing, guys? Are you learning anything? That's where John Novak's at today. That's pretty good, huh? Doesn't suck. And he does this with 2 lots. It can be done. Can I explain how you take this setup where the price breaks through the fib with odds favorable momentum and the open of the bar is below or above the fib? So you're talking about Ron's trade, Ollie. Absolutely, I'd be more than happy to. Hold on 1 second. Here's the whole set of rules, Ollie. What's the first thing? Odds favorable momentum, mandatory. Odds favorable momentum, momentum for the win. Have to have it. So the way Ron does it is the back of the bar clears the fib, which means that the price is all the way up here. And you're going to see it. You're going to see the price going, and you're going to see the back of this bar not above the fib yet. So the catalyst for entry is that you get that print. It starts the new bar, and when it does, Ollie, price is right here when the back of the bar clears. Does that make sense? So the large chart's done. Small chart has to have a clear path, and you have to have room to make $110. That's it. Those are all the rules. How easy is that? But here's where mistakes happen. Is the small chart, if you've got fibs in the way, if you've got one-to-ones in the way, if you've got divergence in the way, yes. Because the whole idea behind this, Ollie, and I'm going to get everything off of this. And I think this is the part people forget about this trade. The whole idea is that momentum carries you to a quick profit and exit, right? Because it's momentum, and we know that the market fluctuates. The market fluctuates all the time. So in with no obstacles, large or small. Because what do obstacles do on a chart, guys? They create bounces. Obstacles are psychological numbers that can create a fluctuation in price action. So you want absolutely nothing, and this is such a big deal. My wife is learning this trade right now, Ollie, and she's on market replay and she's doing it. And there's so many times where she's like, there's no room on the small chart, and then it bounces, and she's like, oh my gosh, I'm so glad I didn't take that trade. I took one of them this morning. Let me find it. And I knew that it was a little tight. I let it clear the obstacle because look at the bounce, right? And once it cleared it, it was quick profits. I didn't have room to make $100, but because of the looks, I was willing to take a $140 trade. Lines on the small chart screw up your good time. They always do, especially in this trade. So your entry on this trade would be right around the base of this bar. And you would want to make sure that you had room to make $100, and you'd want to make sure that the small chart had a clear path. And that's the whole thing. So I'm not sure where that was. But for example, back of the bar clears trouble. This is how you can study it. And put a circle at the bottom of the bar that clears trouble. I had a clear path, it would have got me. I leave 7 ticks on the trade. That's it. I've got a 7 tick stop, and it either gets me or it doesn't. Either goes or it doesn't. And my goal is $100. That's it. And when I start getting close, when I'm a tick or two off of my goal, I'll usually go break even. Because I'm not going to give it all back. I'm not going to take a loser if I'm a tick from my goal. I'm not going to exit, but I'm not going to give back, potentially $360 worth of money because I get close. So this one right here, you probably would have got stopped out. If you were in at 10, maybe it was 16. No, that one would have got me. Would have stopped me out, and then it would have finished the move. And that's the deal, is this isn't a trade that is a big profit. This isn't a trade that's a home run trade. This is a let price clear the area, and I think it was that bar that did it. And once again, probably didn't win. And when these momentum trades fail, Ollie, very often they turn into trend trades if the large chart is going. So Jen showed us a brilliant idea where she got into one of these trades, and when it failed, she said, wait a minute, with this beautiful look, it's just a trend trade. And she just added contracts and took the trend trade down. So believing and understanding that it's not a home run trade, I think is the core to finding success with it, Ollie. Did that help a little bit? Cool. Ah. I just closed stuff out here. I'm not sure how I did that. Whoa, I just lost you guys. Nope, there you are. We're good. Can you guys still hear me? Totally. I don't know what I did. Okay. I like minimized everything and showed up someplace different. And now I think we're good. Now I think I'm back. Cool. It stinks to be human every now and then. Stinks to be human every now and then. So yeah, guys, I'm not going to hold back from you. I'm going to try and help you with anything that you need help with. But I'm going to tell you right now, if you're looking for new trades, if you're looking for more trades, if you're trying to find that next trade, and even more importantly, if you're trying to copy somebody else's trade, what you need to do is you need to study it. You need to practice it. You need to take pictures of it. And one of the things I did, Ollie, is I went through, and first I messed that trade up a lot because I didn't understand the management. I didn't understand the small chart clearing and stuff like that. Yeah, that was kind of pretty, huh? Once it cleared that divergence low, that was pretty easy. And guys, it's okay to make mistakes, but when you're learning something new, I can't stress this enough. Simulator is the best place to do it. If you're trading a new market, if you're trying to find a new look, if you're working on management, guys, Simulator's a great place to do it. There's no reason to blow out accounts guessing and trying to figure things out. There's just no reason. My 2 cents on it. You guys can do whatever you want though, because I refuse to give trading advice. What do you guys want to talk about? What do you guys want to talk about? And Ollie, I just dropped something in your inbox. If you see a message, that's from me. Guys, if you didn't trade into trouble, you were good. If you traded beyond trouble, you had room to get to the next level of trouble. That looks like a 50-50 with no divergence, right to the mid-band inside of triggers, and down it goes to that fib that you're hoping breaks. Anybody take that one? Weak triggers. Started down. CW caught it. Did you catch it from the area? Or did you panic and get in when it almost started to go down? This was the bane of my existence in the beginning, is I would get so caught up on these fluctuations, I'd get in there and then to go right to where I wanted it to. Guys, this is beautiful. All the momentum, potential to break, no divergence. You got 2 lines inside of triggers. It blows through the first one, goes to the second one, and it's still going down. And now you're on the right side of everything. Good stuff. So Ollie, for you, you'd be waiting to see price clear this fib, if that's what you're working on. It would have been right here. And then my stop would have been right there. And then look, I'm in, so I don't miss the trade. And then once I get the reversal bar, my stop comes down. And then there's my first exit at trouble. And then divergence has me exit. How cool is that? And now I've got divergence on a 50-50, and my plan says no. Do I ever let it bounce around to see if it'll go to the fib? No. Belt, I just follow my rules. My rules have been proven to more when... Yeah, waiting for the fib, I might miss it, right? That's what my brother calls tripping over pennies to try to save a few dollars, right? You're stumbling over the best entry, hoping that you get a less risk or that you get that extra $20. And then if it bounces off the mid band, you're just pissed off. I can't believe I missed it. And you're not allowed to say that because you have rules that say get in just below the lowest point. And that's the reason. That's the reason we do this. And that's why we create the window. So as long as it's in the window, it's good. But because of this level of momentum, let's get in at the bottom of the window. Does that make sense, Belt? Right on, Ollie. Takes a little practice. Takes a little practice, but see how you didn't clear the divergence low line here? Price cleared the back of the bar, cleared the fib. But do you see that line? That line keeps you out of the trade. Keeps you out of the loser. Does that make sense? Cool. And that's the hardest lesson for new people, is they hyper-focus on this one, and they forget to check this one to make sure that there's room to a target or to make sure that they're not trading into something. And it's just a different sort of trade. It's just a way to capitalize on momentum. Look at that exit. Rock solid, C-dub. Then it pulls up, and you get in just below, and you got stopped out in the window of opportunity. Why? Why did you get stopped out at resistance inside of triggers, C-dub? Go run a lap, man. You need 10 laps. For this one, you do. And guys, this is why we create the window. And as long as you're in that window, for the love of fuzzy, don't get stopped out in the window. 4 ticks above the triggers. That's it. That's your stop. To tell the story about how this guy died a horrible death, right now, they're around the campfire. They're like, you should have seen stop 54.84. That asshole was right below resistance inside of triggers. They got him. Shot to the head. He's no longer with us. And that, what is it? That 2.5 points here turns one of these into break even. Do you see that, C-dub? That 2.5 point loss turns this guy into a break even trade. You took 3 beautiful contracts and only got paid on one of them. Does that make sense? You gotta trust the window. Gotta trust the window. And yeah, Ollie, the rules just say, for the most basic form, the market, stop goes where the market shouldn't. We don't expect it to go beyond the triggers. If it does, we don't want to be in it. You got some hanging orders, C-dub? These are gonna mess with you if the market goes up. Hold on one second. I got a picture. Is that it? Yep, here we go. So you're going to have to reset data and stuff. You're going to have to disconnect and go through and repair and reset. And that typically fixes it. There's a picture. And that'll get you. And then Cheetah, what I was saying is that don't trade into trouble. That's all it was. Don't trade into trouble. If you're trying to be Ron, don't trade into trouble. It creates bounces, right? And then once you get to the other side with odds favorable momentum, Ollie, do you see it? Cheetah, do you see it? Once you get past the trouble, holy shnikes. You can't stop that market. There's nothing to create a bounce. Beautiful. Love it. What's the hardest thing about trading, guys? It's not trading. The hardest thing you will ever do is absolutely nothing. The most difficult thing to do, day in and day out, is not a damn thing. True story. To watch a market and say to yourself, I don't have the advantages I need to enter the trade, therefore I won't trade, that's the most difficult thing that you'll ever do. And if you don't know your rules, if you don't know why you'll even get into a trade, well, then you're more likely to jump into the wrong trade, guys, to give that money away when you shouldn't. Avoidable losses are the only losses that piss me off. When I take a trade because I broke my rules, and guys, I do it just like everyone else, those are the losers that piss me off. Because I know better. Because I know how to find the correct entry. Because I studied the right entries. Because I believe in the right entries. But every now and then, that 6 Bloody Mary breakfast forces me into bad decisions. And I pay the price more often than not, guys. And one of the most common phrases in this room is, hey, Mark, you know when I follow my rules, I tend to win. When I keep it simple, I find my trades. When I follow the plan, it's difficult to lose. And when I follow my plan, Mark, it's weird. I only take 3 or 4 trades a day, but I take the right trades, and they turn out to be pretty easy to win. That's all I'm trying to instill in you guys right now, is that rules are there for a reason. Trading doesn't have to be emotional or stressful. Trading is all about patience, guys. And if you just went long into a termination condition, the market will let you get lucky every now and then. The market will give you $100 on this one to make you believe that that's the right thing to do. And then on your next 10, it's going to pull it right out of your pocket because it's training you to break your rules. Look how far away those large triggers are. Here's your gap theory. So, anyway, good day today, guys. I really do.